Guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you're able to stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to talk to you about what it actually takes to be successful in stock market investing. If this is your first time joining me here on the channel, go ahead and hit that subscribe button, and you'll be notified every time I upload a new video. Guys, understanding the stock market can open up a wealth of opportunities for you to create your own wealth. And it's important that, again, when you're building wealth and with money or anything you have in life, you have clear expectations of what is needed from you and what you should expect. But with all things that are new and that you start to venture off in the learning phase and in order to be comfortable with, you have to really kind of spend some time immersing yourself in the process, in the watching the day by day, and even learning how that activity works. And in this case, it's the stock market. It makes no difference. So as I want to walk through a few things to help you gain some traction, become a little bit more mature so that when you approach this stock market investing, you understand, hey, I've not necessarily aware of specific how the challenges will look to me, but I know these things overall. What has helped me go through it? So I've been investing in the stock market really deep for the last 3-4 years, but I've worked in financial services for nearly 8. And working with clients, it's really one of those things of seeing the experiences. I've come to be so comfortable with it. That's the thing. You have to first be uncomfortable because it is a new experience investing in the stock market. But you have to understand, what is it going to take for me to become comfortable with this thing? Why do people have challenges with the stock market? Well, it's pretty much all to the same thing. The stock market went down and they lost a lot of money. Well, why did they lose a lot of money? They were forced to sell. Why did they sell? Sometimes, depending on what their other financial situation, the rest of their financial situation looks like, it caused them to have to need that money in the stock market. And they, at the time when they needed it, the stock market was down. So the whole thing about the stock market is when the money is up, it's an opportunity for you to enjoy some of that wealth. But because the stock market does fluctuate, no matter what time of year or day it is, it can fluctuate. That's how you need to be prepared to be able to weather the storm of that fluctuation. And one way you do that is you kind of secure your financial future before investing into the stock market. Meaning you have an emergency fund. You're living on a plan. Second, you make sure that the money that you're investing in the stock market is not money that you will need for at least 5+ years, because that gives you the greatest opportunity from a statistical standpoint that you will have a positive return, 96% to be exact. So I would encourage you, make sure the money that you're putting in the stock market is not something you need for at least 5 years. You're not using it to buy a car in the next year. You're not needing it to go out of town, things of that nature. That's not what you're planning for. And in order to really be able to ensure that you don't need that money, that's the importance of living on a budget and making sure when you allocate money off, you've already said, hey, I'm saving this, I'm saving for the long term. The second thing people look at the stock market that typically makes them unsuccessful is they buy for a shorter period of time, meaning they're not using a buy and hold strategy. A buy and hold strategy means you're really investing for the long term. 10, 20, 30 years when you're looking at your investment horizon until you start to draw down some of those assets. And even when you start to draw them down, you already have a specific amount that allows your money to perpetually continue to grow while you're actually drawing down. So you're not drawing down all the growth. You've built up enough assets to where you can have a very comfortable drawdown of $60,000, $70,000, $80,000, but still there's part of that growth to grow, because money will at some point move forward in terms of inflation. That's very important and vital that you understand that the point of wanting your money to grow so quickly is that $10,000 or $20,000, or I'm sorry, we're talking in terms of salary, $50,000 or $60,000 right now today is not going to go as far as $50, $60, $70,000 20, 30 years from now. Inflation, no matter how much they hold off for right now, it will have a price, and taxes will be increased by that time. That's things we can be very certain of. So it's important that we understand how we're growing our money and what the money truly actually means, because we won't get that big lump sum of growth in the next few years unless you're putting a substantial amount away. But the average person, probably not so much. So it's important that you understand the value of your money and what's the weight of it, but also you're buying and holding for a long term. You're looking at something you're comfortable with, or you're at least trying to get comfortable with the movement of the stock market. Now, you may be watching this video in 2021 and may see that it's a volatile time. Every day it might be up and down and low. Something's going on. Well, that may be true. So if you're watching it day by day, you can honestly make yourself sick, because one day you may be up $200-300, the next day you might be down that same $200-300. And who really likes to lose money? But the other thing is, you have to understand what the stock market is. You really do want those times when it's down, because number one, that's the bear market. The bull market is when it's the consistency of the gains going over and over. But the bear market really is when a lot more of your wealth is built, and a lot more of your opportunity to build wealth is built, because that is when essentially the stock market is on sale. You're able to buy stocks and index funds and mutual funds and what have you at a lower price, knowing that these things will rise back to the price and higher levels than they were previous. So that's the next thing I want you to focus on. Understand what's your opportunity with the stock market and what's going to be your challenge. See, the biggest challenge with a lot of people that have lost money in the stock market is they weren't necessarily prepared from an outside standpoint. So that's one. They just didn't have their emergency fund. They didn't have their plan going, and they needed that money. The second thing that really kind of tears them up is if you don't understand your particular strategy and why you're invested in the index funds or stocks that you're invested in, and how those investments actually work and how they actually work together to formulate your plan, then when the bear market hits and when the stock market is down, or when something hits the economy like this pandemic, you will be so inclined, depending on the amount of money that you have, it will make you kind of nauseous. And in some cases, it will take you to the point where you want to actually withdraw your money. And I've read that through many different experiences. I've seen it through many different cases. The whole thing to strengthen your ability to win with the stock market is how long you can continually stay with it. One way is understanding that, hey, no matter what goes on with the stock market, it always comes back. Even with the piece of the pandemic, it was down, cut in half, chopped in half in March, but it came back. It came back about 9 months later, 6 months later. That may not always be the case from a time frame standpoint, but the fact is it will come back, and you have to have enough measures in place that it will come back. Last thing I want you to discuss is understand, as you grow in the stock market, your risk tolerance does change, and how you look at things does change. I like to compare that to the idea that when you make more money, you consider different things. It's easy to say when you're looking at your friends, or when you're looking at somebody on TV and you hear that they make $10,000, $15,000 in a month, you're like, oh, if I had that money, I would do X, Y, and Z. but you don't necessarily have that money at that time, and you don't fully understand number one, the maturity that it takes, but then also the financial challenges that come along with that, and what that actual money typically means in the month to actually maximize the resources. The same thing can be said of the stock market. It's easy to say you'll weather the storm and you'll fight through and you'll keep going and you'll be persistent when the stock market drops. But if it dropped and you only had 30,000 in the stock market and it's down to 20 or 15, it's a lot different from if you had $600,000 and now you're down to 200 or 300 or $400,000. See, there's a different weight and there's a different maturity with it. And so while these principles and ideas can be helpful for you, you do have to understand they become challenging the greater the number starts to get, because it starts to really mess with the psyche that we all have struggled with. That we didn't come from a family filled with wealth. 80 to 90% millionaires, first generation rich. So that means you have to learn each stage of wealth building, and you have to grow with each stage of wealth building in your maturity and your knowledge and your intelligence. And understand that, hey, each new level of wealth is going to require you to level up your game. And that's the same thing with your investment. Sometimes with your level of wealth, you have to change up a little bit of your strategy so that you make your strategy more sustainable. Sometimes you may have to change up your investments because there are more things that are available to you because of your level of wealth. The options that are available to a 200 to 500,000 person is not the same as 10 to 30,000 or even $5,000 person. That can be challenging. The last thing I will share with you in building this wealth is I want you to think about how are you actually spreading your risk. There are many different ways, to build wealth within the stock market. And there are many different ways that people build wealth. But ultimately, the volatility comes from, and the risk really comes from, are you in something that has a higher chance, like one single stock, multiple single stocks, where you have a good majority of your money, you're hinging your hopes on that company's success? Or did you spread your risk across, like in an index fund or a mutual fund, where you're over 200-300 different stocks or 2,500 different stocks, where many different companies are involved, so that even if one company is down or 10 companies are down or 100 companies down, that isn't driving your returns. A good example of that is what we recently faced here in 2021 with the 2020 with the pandemic. These are opportunities that should teach and strengthen you about the stock market, and it should help you find the value of your investment plan. So for me, the investment plan, what I learned is, no, you really can't predict what's going to occur. But it's very interesting how things worked out. The S&P 500 index fund, and even what people were using to track the economy, was driven mostly by 4 or 5 major stocks, and it's over 500 stocks in that fund. But 4 of them was driving the returns for it to consistently have positive return. That's why it's great for you to have your money spread out. So I want you to think about, what is it going to take for you to be comfortable with the stock market? What is it going to take for you to be confident in the stock market? What are the things that make you apprehensive about it? What are things that you can do to help strengthen you in each one of those areas to help you move you forward? If you like this video, I want you to give it a thumbs up. It really helps me here on the platform. Share it with a friend. It's up to us to help everyone be successful. I hope you guys enjoyed this video. If you have a moment and you're looking at your next stock platform, check out the Webull link below, where you'll get 2 free stocks just for opening up an account with them and depositing $100 on the platform. If you haven't already, please subscribe to the channel. And I can't wait to see you guys in the next video.